Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Tuesday, April 21st, 2020. We're looking at the EURCAD on the 4-hour time frame. This is a stop hit of two levels. Okay, we have this push point right here, and we have a bounce right here. Okay, I'm sorry, a bounce and another bounce. Two bounces. The market pushes back to this bounce level. We take out the highs, close back below both of the highs, as you can see right here, forming a bearish spike candle on the close. We got in on a slight retrace. I'm going to go to T1 with this trade, and again I'm comparing that to all of these candles that we're trading against, and per the rules of our engagement, that's the way that we handle this. That's classified as a T1 trade per the rules. Okay, so it's a stop hit, and again the idea behind this is stop loss orders are sitting here, and stop loss orders, whoops, let me zoom out and try this again. Okay, stop loss orders are sitting here and here. All right, and when we get back to this area, all right, where everybody's going to try to sell again, and they're hoping that we have a 1, 2, 3 time failure, well, they get stopped out. Okay, and then as this candle forms, this is a big white candle as it's forming, and so now you have breakout traders, and they're buying right here, and they're putting their stops here. Okay, the market closes back below, and off we go to the downside, taking those stops, taking the stops that were in place from these traders. Whoops, back here. It's difficult to draw with the mouse. Okay, give me a little bit of slack on that one. All right, so here we go, off to the downside, and again, we have been hovering now for 12 hours. These are the 4-hour candles. So we have been above that entry line for 12 hours now. Ample opportunity to look for, let me drop down to the 1 hour, to look for bearish sentiment. Okay, and where you want to get in. Maybe on this bearish spike, maybe on this bearish spike, maybe when it gets bearish here, maybe on this one. Okay, and maybe right here when this is a bearish engulf on the 1 hour, you could drop down to the 15-minute, and you could probably catch an entry if you walked in and the price was up here somewhere, and you drop down to the 15-minute. You might find there is bearish sentiment up here, and you might have a target right here, and you might already be out of this trade by entering the original trade setup just on a lower time frame for a better entry. Okay, of course there's guidelines of when and when we don't do that, but if my point is, if you miss a setup because you can't be there for that candle's close, there's opportunity. I'm trying to point this out because it happens trade after trade after trade, that there's candle after candle where there is opportunity to get in if you weren't there on that close, because that is the biggest question I get from members. How do I sit here for every close of every 4-hour candle every week? It's impossible. I have to sleep, I have to go to work, and so forth. Well, that's the beauty of this. A lot of times you're going to get a better entry. Okay, and let's just say, take for example, let's say you did get in here. Let's drop down. I just want to give you an example of what happens. Let's assume that you walked in around here. You sold this on a 15-minute maybe, and your exit was here. You're already out of this trade. Okay, now maybe this is going to on us, the folks that got in on the 4-hour. Maybe right now this is going to reverse and take our stop, and you would have taken a 2 times profit, and we lost this trade. So when you catch those opportunities that those that got in on the 4-hour lose on, and you win, it all cancels itself out, if you see what I'm getting at. Okay, so that's a huge key to this method, is that we have a lot of cross checks and balances that tend to kind of even themselves out over time. Okay, we'll get back to this one later. Welcome back, everyone. It's now Wednesday morning, April 22nd. The market has finally pushed off to the downside after this stop hit formed, taking out these highs that we discussed a few moments ago. This was, at this juncture, we have now stalled another 8 hours above the original entry line. Okay, so that's a total of 20 hours that the market spent approximately above the original entry for opportunities to take second chance entries. Okay, and I want to point out one more item of interest, just so that you guys know. The ebb and flow of the market tends to be lend itself to these patterns that we have basically designed around the ebb and flow of the market. Okay, this is the way the market moves, and let me just explain real quick. We, in this case, make new lows, bounce points, where the market fakes everybody out. We then, in this case, break through. The market then checks this level, okay, to see if this is where a reversal is going to take place. Okay, if not, what happens? Well, we test this level with what you see right here. This wick moves up, and then as the period closes, it fails and it rejects this level, and then the market will continue to the downside. All right, and again, our patterns are designed around this movement of the market, and that's why they work so nicely with this 2 times profit to risk ratio. It's a perfect system that is perfect as it can be. It's perfectly designed to target these bounce points with each respective time frame. Okay, so this works across all time frames, and that's how you do it. Okay, questions, comments, concerns, send me an email. The link is down below. It's also on the website there. We provide a link for that. Come over, check us out. There's a lot of free information. And now I guess what we're going to be looking for is this bounce low right here, the same as what you saw here. Is this going to reverse? Okay, are we going to close below it and then check to see if it's going to hold, and if it fails, okay, which way we're going to go. There's a lot of patterns that will form at these bounce lows or highs. Okay, talk to you guys soon.